This edition of Toggle's Daily Video Insights. I'm Jan, one of the co-founders of Toggle, and for those of you who are new, welcome. In these videos, we take a deeper dive into one of the many insights that Toggle has produced across thousands of US equities and take a look at what kind of price pressures and drivers the system has identified. If you'd like to see more of these, sign up to our YouTube channel or check us out on toggle.global, where you can actually also try Toggle for yourself to see if it can help you improve your own investing style. Today the focus is going to be on CCEP, Coca-Cola European Partners, not to be confused with the Coca-Cola company, the famous producer of Coca-Cola. This is a company that bottles and distributes Coca-Cola products in Europe. And so what Toggle is highlighting here, as you can see, there have been a range of positive pressures that it's highlighted. Some of them technical, some of them momentum based, and the latest one we're going to take a look at now actually is momentum based and suggests that the stock could move up as much as 25% in the following 6 months. Now, clicking on the insight itself, we're going to take a look at the underlying analysis, and what we find is that there have been another 15 occasions where momentum indicators for this particular stock have been as strong as they are now, and that historically this has led to 26% gain over the following 6 months. Now, the starting price of 53.60, the assumption here is that it might rise to as much as 67.85, staying, of course, inside this confidence interval is what you are looking for, and not dip below 46.48, in which case the odds of momentum still being the primary driver here would have gone down dramatically, and this is a good place to reevaluate the position or potentially place your stop loss. Now, why it might move, let's take a look at this. As you can see, momentum that we are looking at, in particular the 6-month momentum, is really quite high, and there have been a handful of occasions when that was the case, and usually these rallies have tended to extend for quite some time, as you can see here and then also here. So I guess the bet here is that this could potentially power through the current highs. Looking at past performance, you can see that the risk return looks quite compelling. Of course, on the other hand, there have been some years where this went down quite a bit, so anywhere near 10 to 30%. So the importance of the stop loss really needs to be underlined here, that if the stock stops performing in line with this past driver, the prudent thing to do is to cut the position and then come back to either this or another idea. The upside is quite compelling, and it was plentiful, anywhere again between 10 and potentially 40%. But as you can see here, partly because of these negative returns, the P&L of placing your bet on every one of these past episodes starting with $1 would have resulted in $4 of profit, but in a very, very volatile way. So much for CCEP today in the daily brief, which should be in your mailboxes if you're subscribing to it, and if not, please check us out at toggle.global and you can sign up there. The focus today is on banks, why their earnings are so good, and what does it mean to be releasing reserves and how they impact earnings. So thanks again for your attention, and we'll see you on Monday.